Well, hello everyone, and hope you're all having a great Wednesday. My name is Jean McDowell with TradersCoach.com, and welcome to Wednesday Night Live. We've got a great educational event for you this evening. Tonight, we have Bennett McDowell from TradersCoach.com, and he's got a presentation entitled Systematic Approach to High Probability Trading. Bennett is founder of TradersCoach.com way back in 1998, and he's an expert in technical analysis, money management, Elliott wave techniques, and trading psychology. He presents the TradeStation Morning Market Briefing every other Wednesday, and in addition, TradersCoach.com has received numerous Stocks and Commodities Magazine Reader's Choice Awards. McDowell has written 4 best-selling books: The Art of Trading, A Trader's Money Management System, Survival Guide for Traders, and Elliott Wave Techniques Simplified. Well, Bennett, I think we're ready to turn it over to you, and thank you for being here.
Jean, thanks so much. It's great to be here. Welcome, everybody. Today we're going to talk about a systematic approach to high probability trading. We also call these our secrets to high probability trading. And in today's webinar, what we're going to really focus on here is how to prepare each and every week in the beginning of the week. So it's really important before the actual market begins on Monday for you to have a game plan. That's really key. A lot of traders will, either day trade or start trading Monday, but they really didn't prepare themselves over the weekend for what the market may do. So we're going to talk about the importance of that. We're going to also talk about a subscription service that we have that's going to help you prepare for that Monday morning excitement. So let's go ahead and dive into it. Jean's already introduced me, and I thank you, Jean, for that. And also, too, please stop by the website at TradersCoach.com. We've got a lot of good stuff there, a lot of free stuff there, so you may want to check us out and see what we're all about, but that's the place to do it, at the TradersCoach.com website. Also, too, I have 4 books available at major bookstores around the country and worldwide, and probably the easiest place to go to get these is Amazon, where you can read the reviews. They're kind of fun to do as well. My latest book on the far right-hand side is Elliott Wave Techniques Simplified. This is a form of technical analysis that I have focused on, and so that if you want to know about the Elliott Wave and yet you find it very complex, that's a great book for you to begin. Survival Guide for Traders is the book on the inside to the left, and of course this deals with how to run your trading business as a professional hedge fund right from your home. With today's technology, you don't need to be in a big urban area anymore, so that's wonderful. All right, The Art of Trading is the 3rd book from the right, and this is our Bible on applied reality trading, which is our trading system. And then the final book on the far left is A Trader's Money Management System, and we deal with risk control. We've also simplified that as well because, if you look under portfolio management and some of these complex books, there's a lot of complicated formulas that can go into portfolio management. So what we've tried to do is summarize that and strip it down to where traders can use that on each and every trade. So that's a great book as well to help you with your risk control efforts. Now we're going to talk a lot about some trades today, and we're going to talk about the excitement of trading, but we also have to realize that there is risk in trading. But without that risk, there's no opportunity either. So the two go hand in hand. So it's important you realize that there is risk in trading. All right, I got a few questions for you all out there. All right, first question. How many people think trading is complicated? How many people think trading is complicated? Quite a few. We got a big group here. So wow, this is awesome. All right, good. A lot of people are saying yes, some people are saying no. All right, probably depends on how long you've been doing it and how organized you are and what kind of trading rules you have in place too, right? Okay, next question. How many of you would like to start each week with a game plan and a list of high probability stock trades? Because that really is the purpose of it, right? Of course. Okay. Well, you're in the right place because we're going to talk about how to get yourself set up so when Monday comes, you hit that Monday morning running instead of falling, okay? So we're going to talk a lot about that today. All right. Now, of course, Also, we go into the market analysis as well, because you have to know what the market's going to do each and every week, don't you? That's important. So your goal each week is to make money, okay? And how are you going to do this? You got to start each week with a systematic plan or approach, and this is what we're doing here today. We're getting ready for that type of analysis. All right, we have a service called the weekly MOR Subscription. How many people out there currently subscribe to that? A number of you. Excellent. Okay. Excellent. Good. All right. Well, basically what we do with the MOR Subscription is each and every week we analyze the markets for you, and we actually give you a list of good, solid trades for that upcoming week. And I'm going to show you what the report looks like, and I'm going to tell you all about the services later on. In fact, I also got a bonus here at the end. We've got one trade here I'm going to share with you towards the end of the webinar. So this will make you stay around for the whole webinar. And this one trade has over a possibility of 100% return. So I'm going to talk to you about that and show you the actual symbol and where it's at currently. So don't leave, okay? You definitely want to hang around for that. All right, so we're going to talk about the MOR Subscription and some of the action steps that we take during the weekend to get you ready to go on Monday. So a little bit about the MOR subscription service. Once again, it is a weekly update on the markets. And with that update, you're going to get a report, and you're also going to get a video, which is about 30 minutes long, that I do each and every Sunday. And I go over charts for the markets, and I'll go over each and every chart that we're suggesting a trade on as well. So that's available by 6 p.m. Eastern Time each and every Sunday. But here's kind of what some of the steps that I take, and some of the steps also that you can look at as well, so you get a better idea of what the MOR service is. So to start with, okay, first thing we want to do, obviously, we got trading hours between Monday and Friday. So that's the short-term look on the market. And then we have an intermediate, which is a little bit longer, and then a long-term outlook on the market as well. So the first thing we want to do is focus on, hey, what's the market going to do for this week, this up and coming week? And so we're going to analyze the Dow Jones Industrial Average and the S&P for some key price levels. We're going to look at Elliott wave counts. All right, we're going to look at price patterns to see what kind of entries we can get on a variety of indexes as well. So we're going to look at all that stuff and see exactly where the market's going. Do we plan on it selling off this week? Do we plan on it increasing in value, going sideways? We want to know what is going to happen with the market for the first upcoming week, because that's going to allow us and help us to time our trades. So that's step one. Then we're going to look at target zones for these different major indexes like the Dow Jones and the S&P. We want to see, are we in a target zone? Do we have a lot more potential left in a particular trend before it gets to a target zone, whether it's bullish or bearish? So it's important to establish and kind of realize where you are in the market in relation to the shortest target zones that are going to be coming your way. That's really important. We're going to analyze multiple time frames for opportunities as well. We don't just stick with the daily charts. We'll drop down to some intraday levels, but we'll also pick it up and even go to long-term charts to get more clarity on where we are in the market cycle. The second step is we also want to keep our ear tuned to what's going on in the world. You know, is oil in play? Is gold in play? What are the financial gurus saying? Now that doesn't mean if a financial guru says buy today, that doesn't mean we buy today. But we'll take a look at that market and see if our technical approach agrees to what the guru is saying. Maybe it does, maybe it doesn't. Maybe he's right, but the timing based on what we look at is not quite there yet. So we may put that on a watch list type of thing. So we create watch lists based on what's going on in the world and also to what the sectors are doing. You've all heard of sector rotation, where sectors will run up and then stocks will rotate into some lower cap stocks after the big cap stocks run up. So we take a look at that information as well. There's a lot to look at, so you don't want to bury your head in the sand and just look at a few markets. You want to kind of have, be alert and see what's out there in the world that could be a good opportunity for trading. You know, you may uncover an emerging global trend. All right, that's another thing we look for. So there's a lot to look for. So step 2 is looking for these markets that are about to come in play. Now we go on to step 3, which is basically the goal here is how to make money for the week. So we try to find the best trading markets or opportunities. So you're not stuck in a quiet market. We always want to be looking for good potential. And so that's one of the things we do, and we try to deliver to you each and every Sunday. And then we're also going to locate key entry stops and so forth and target zones. So you know what you can expect on each trade and apply risk control accordingly. Action step 4, okay, is then going ahead and determining, again, the best time to enter and exit or monitor a trade as well. You know, getting in is one thing, but once you're in the trade, you know, what do you do? What do you do with your stops? This is each week we go over these type of issues and talk about our current trades that we've recommended to let you know where stops should be on those. So again, and we use a lot of different forms of technical analysis as well. We use price patterns for these entries. We use Fibonacci extensions and retracements for our exact target zones. So there's a lot that we do behind the scenes each and every week to deliver this kind of quality. All right, so let's talk about some secret setups here. All right, some of them, and we're going to show you some examples. Some markets that we look at, we scan for long channeling markets. How many people out there know why we do that? Why do we scan for channeling markets? You're not going to make any money in those markets unless you do some form of option decay play. But otherwise, why are we doing that? Why do we do that? Right, okay, because we know big trends come out of markets that have channeled for quite some time. And we have a formula on how many bars back they need to be channeling and the spread of the channel. So we look at things like that. And then we look for breaks in those channels. You know, the prices break in the direction of maybe our Elliott wave count. And then if they do and they break above the channel, well, that's an ideal entry. Then the next question is where to put your stop. So there's a lot of things out there to take into account. All right, one of the things that we look for is pennants. How many people out there know what pennants are? This is a form of technical analysis that usually occurs. We usually look for a pennant in the market, also known kind of as a flag as well. All right, and these basically are two trend lines drawn where the actual trend lines are getting closer and closer as you get to the right side of the chart. And when they break out, they usually are quite powerful breakouts. So we look for those, kind of like a channel, but they slope. Then we look for Elliott Wave 4 target zones. One of our favorite trades, and one I'm going to share with you today, is an Elliott Wave 4 trade. So I'm going to talk to you a little bit about that. And we look for Elliott Wave 5 tops, which signify the ends of trends and the bottoms and so forth. Okay? All right, so let's go on and talk a little bit more. And I want to show you, our first thing I want to talk about is when we talk about the Elliott wave, what we're talking about is measuring how to measure a trend. And the trends are measured in waves of 5. And this goes back to Elliott, who actually learned this through observation a long, long time ago. And basically, here's the start of the trend at 0.0, and here is the end of the trend at 5. And there's 5 waves in a trend, whether it's bullish or bearish. And so what we do with Elliott wave counting is we try to get an idea of where we are in the trend. Obviously, if you're in this area here, okay, then we know at the end of this move up, all right, we're going to have a pullback to 2. All right, and we've been doing this for over 20 years. So we know from a lot of experience of how to identify the beginnings of these ones. And they usually occur after wave 5. in the opposite direction, and after a channel. Perhaps you may have a basing pattern for some time. But once we identified the possibility of a wave 1, we realize there's a wave 2, so we have to be very careful on setting our stop. You don't want to set your stop too close. You want to set it far enough down so wave 2 has a chance to pull back without stopping you back, because you don't want to miss this wave here. All right, this is wave 3, and that's the most powerful. And then you have another correction, 4, and then a final movement up of wave 5 that will take the market to new highs, and the trend usually ends. Now, we have a whole course on Elliott wave, and so I really don't want to teach you all the ins and outs of Elliott wave, but it's very important for us to know where we are in the Elliott wave in order to see what kind of potential there is to make money. Here's a bearish Elliott wave count at this point. All right, now here's an Elliott wave count that we did on Apple stock, and this is one that we recommended early on, and basically it completed on wave 5 and then reverse direction. So this is one we're able to use the Elliott wave in order to get in as early as possible. Now here's the S&P E-mini on a very short-term trade, short-term time frame, intraday time frame, 2-minute time frame. And here's one where we are actually able to catch the trend down and notice the wave 5 target zone down in this area here. And these are some of the indicators that we use to help us count this. So the nice thing about the MOR subscription service is you don't need to know all this. We're going to do this for you. This is the whole point. We're going to do all these calculations and go through calculating Fibonacci. All right, now Fibonacci is very helpful in order to calculate price target zones. How many out there use Fibonacci now? A lot, right? Tommy, you need to read my book. Tommy says he's having a hard time with Elliott wave counting. Well, in my book, Tom, okay, what we do is we actually put a percentage basis based on different items we look at, like volume compared to wave 3 and 5 and so forth, in order to help you put a probability, call it a probability matrix, on the current count. So it's very, very helpful. That's something you may want to consider. And again, we've been using Elliott wave for a long, long time. Okay, so let's go on and talk a little bit more about fibs. All right, fibs can be found in nature, all right, and usually many types of structures from, fractal geometry and so forth as well can be found in nature. So a lot of the markets are structured around what can be found in nature. And of course, okay, I mean everywhere, okay? Even this scenario is a Fibonacci occurrence. All right, I figure that would be good to wake up all the guys out there. All right, let's move on. All right, here we are using Fibonacci extensions for a target zone, okay? Here's a target zone up here. All right, so once you know 2, 3, and 4, all right, you can calculate your target zone for wave 5. And again, the point is this is kind of what we do in order to calculate target zones, because a lot of times you'll see us mention a target zone, so it's a good idea to kind of know how we do that. All right, so let me go on with a couple other patterns that we look for. Here's the classic channeling pattern, and notice the market here was bouncing around in between a channel that we have drawn a green and red line, red for support, green for resistance. So what we like to do with these types of patterns when we find them, okay, let's say we don't know what this stuff is going to happen on the right side, but if we're in a pattern like this, a lot of people will do one or two things. They'll either look at it and go no, okay, and disregard it totally, or they'll look at it and maybe enter inside the channel, which is going to be tough because they're going to get whipsawed. They're going to have a lot of losses in there. What we do instead is when we identify a channel, we actually get excited about it, but we don't enter until the market breaks above the channel if that's the direction we think it's going to go based on an Elliott wave count. So we get very excited when it does break, all right, and then we look at price patterns. You can see these triangular entry items here based on price pattern. That's the ART software that we use that helps us identify key levels of resistance once a channel is broken. So that's very exciting you can make big money on trends. The longer the channel, the bigger the trend. So we get pretty excited when we scan for those and find those. Here's another one, very similar, okay, broke out, and then it just trends up nicely from there. Usually you get a nice orderly trend from a channel breakout. Here's one where the channel, just to show you the extent of how big these breakouts can be, here was the channel back here, all right, and then it broke out, and look at this, and look what this is. Everybody see what that symbol is? What is that? You betcha, okay? All right, so the idea is you know, this was once a very inexpensive stock and broke out, and look how orderly and big the move was once it broke out. Wonderful trade, and we were one of the first ones to recommend this trade a long, long time ago. This is Tesla, of course. All right, let's move on. All right, trade recommendations. All right, what we do currently, this is a trade recommendation that we had on the MOR report. And let me just show you, before we go into this actual trade, let me just show you what the report looks like. And this is just the written report. Don't forget, we also deliver a video as well. So this is the report that's available and updated to you each and every week on Sunday by 6 p.m. Eastern Time. And we go through some generalities about the market. We take a look and see what the stats were, okay, for the week in some of the major indexes like here. And these are weekly changes. We like to look at the year-to-date stats as well. And then we also like to drop down and take a look at the sector performance. And we like to take a look at the most recent quarter, 3 months performance. And it gives us an idea of how the sectors are doing on the various markets. And we also can compare these with the previous week, and you'll see sectors start to roll over based on this information. We also like to look at the world markets and the fear and greed index, how much greed is in the market. We also take a look and give you a write-up on the current market conditions and some things that we think are important regarding U.S. markets as well as global markets. Here are stock opportunities, okay? We have what's hot, what we're recommending on holding at this point. So we have that. We cover this week's calendar of economic events coming out. And then we actually take a look at the current market and analyze the daily chart. We drop it down to the S&P 60-minute chart for the current week's activity. We take a look at the longer-term charts, and we take a look at the very long-term charts. And then we go finish the report with upgrades and downgrades. And cover initiated is pretty good too, because a lot of times these are new stocks that are coming into vogue, and you can take a look at these and get some really good entries on these new ones. Some of the buys and sells, they're either too mature in terms of getting into the trade or whatever, but cover initiated is a pretty good area. And then we have some other services at the bottom that you can take a look at as well. So that is a copy basically of the MOR written report, and we update this each and every week. So I did want to share that with you. And here's one of the stocks that was on this report. And this is just an example of what we look for. Here is the end of a wave 3 that we've labeled here. And notice we had a little congestion here, and then prices moved above this pyramid trading point. And so on March 2nd, 2016 at 778, entry number 1, the stop is kept down below the bottom of 3. We don't move our stops up until we get closer to the fib target zone. The minimum area we wait for stop movement is 23.6. So we keep it low, and we're very careful of when to move it up. And this is the kind of information that we cover in the video each and every week of where to put your stop and where we recommend doing that. And then we are obviously, this is the wave 4 high probability fib target zone that we've met. All right, so we're in it already. But look, $7.78 all the way up to 2150 right now, all right? And our stop is pretty tight because we're in the target zone. So we're looking at March all the way up to where we are now, December. And at 778, we're over 2150, not a bad return so far, okay? We don't like to take these trades at least unless we have a 50% return on them, because sometimes they don't move always this quick. Sometimes they take a little time. And what's important for us is return on investment. So how fast you're making that profit. All right, it does you no good to make 100% if it takes you 10 years to do it, right? So we like to make it, of course, a lot quicker than that. So that's one, all right, out of the current service report. Let's take a look at another one. All right, here's one as well, all right, that was a wave 3 bottom. And notice at this point our entry here was at 1781 on August. And here we are approaching December here, middle of December, and we're at 3841. And we still expect this to go into the 48.91 area. But now we're above 23.6, so we're going to move our stop from here now up to here. All right, that's our stop currently. We'll keep it there now until we get into the target zone. The biggest mistake people make in these wave 3 to 4 trades is they move their stop way too close, way too close. All right, you got to give the market enough room, especially on a wave 4 type trade. All right, let's go to the next one. All right, this is our bonus. This is one that I wanted to reward you because you're here. All right, you took the time to come here. So this is a wave 3 trade down here, okay? And notice prices are at 926 as of today. We expect this to get up to 1847 to 2706. This is still an excellent place to get in at this particular point. Put your stop right under here, okay? Right under the August low, and you'll be in good shape. You don't have to put it under 3. You can put it right under August, okay? That's it. So I want to thank everybody for taking the time to come today. The purpose really today is to provide you with help so you can get ready each and every week to trade the markets.